All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Let's go take a look at Tesla, LinkedIn, and talk to you about thought process here with the challenge, where things are at, and going forward here. Let's start with Tesla. Tesla here, we're up somewhere around 50-60% on it, somewhere in that range. Tesla is failing a little bit up here at 150, not able to hold that. Jay, you make a good observation. Maybe option expiration related, as some of the weekly options expire here today. It could be. I mean, overall, the action on Tesla here today very insignificant, very little range, not a ton of volume. Continues to overall be bullish. I was asked earlier if I was concerned about the 50-day moving average, and no, not at all. Not at all. Here with the 50-day, if you look at Tesla historically, it doesn't have much of a reaction to the 50-day. That's not a trade driver here for Tesla, like it can be for some other stocks. And so volume pattern remains strong. The breakout above 145 here this week, very bullish overall, and still looking for Tesla to run. LinkedIn a little bit more concerned here. LinkedIn, you'll notice when we entered the trade, we didn't use the 7 because it was right there. What I'm looking at with Tesla, or what we're looking at, is the 228 to 230 area. Okay, and let me zoom in here on LinkedIn, and this is the area that we're concerned with, this 230 area, and holding on to this level. That's kind of the lower Bollinger Band, and that's kind of why we've said if it breaks 228 at any time, we'll back out. If it's closing below 230, we'll be a little concerned and may potentially back out into the weekend. It's right here. I mean, it's right there at 230, kind of hitting the lower Bollinger Band here overall. Any type of small move higher Monday morning would be extremely bullish here for LinkedIn. It's had its kind of ABC like correction here. There is a chance that it doesn't hold, but it's right here at that support level. So basically, the question that I've kind of been going through here when it comes to both Tesla and LinkedIn is, hey, would we rather hold Tesla and LinkedIn into Monday, or back out of one or both and go after U.S. Steel and AKS? AKS is my favorite trade on the board. It's absolutely my favorite trade on the board. The trend remains higher. A fresh move back above the 7-day moving average here today. Extremely bullish consolidation up here around 6. Option prices are very cheap. Overall for AKS, you can go buy some January 5.5 calls for about 65 cents. You got about 15 cents of fake value with it. And so they're set up very nicely here on AKS. U.S. Steel, which Carl talked about as well here today, also set up pretty well, but AKS is my favorite on the board. What we're going to do, though, is we're going to hold Tesla and LinkedIn, okay? Tesla and LinkedIn, provided that LinkedIn, holds on here. But we're going to hold both of these into Monday. And what we're going to do here is we'll look to pull them off Monday morning or Monday afternoon. Kind of let them move, let them work here on Monday. Look to pull them off, and then go after and start to set up some straddles, and as we head into the Fed next week here with the challenge. Okay, if you'll bear with me, I'm going to pause for just a second. Okay, my apologies for that. One of the things that we're looking at here is pulling off Tesla. And I know this is a little different than what we've talked. We have all the reason in the world to potentially hold that. Why are we considering pulling off Tesla? Simply to free up cash to go after things Monday, and not to be fully invested here into the weekend. Do I still like the setup on Tesla? Absolutely. Is there a little bit of gravestone action here today? There is. Holding it over the weekend, I think we have about 145 is the risk here. So about a $3 pullback, kind of a gap down is that risk. And so kind of on my other screen here, I'm sitting here kind of analyzing that risk here for the trade. Still knowing that 155 is a pretty conservative target for Tesla. And we could run up into the 170, 180 area, depending on what kind of happens here overall with the Fed. Whether it's LinkedIn or Tesla, okay, and let me pull up kind of minute charts on them. Okay, the action here today is not overly significant. There's not been a lot of volume. Yeah, they both shot up on the open with market futures, especially tech futures up. Came back down, but neither of them is the action to where you say, "Hey, this is a game changer." This is switching a signal. This is, like Microsoft this week when we got into that. The next day as that pulled back about 30 cents. Okay, that was a game changer for Microsoft. But with Tesla, with LinkedIn here, we're not really dealing with any game changing type of news. My concern with Tesla here is if it starts to sell off a little bit more into the close, I'd be very worried about Monday's open. So we'll kind of keep our eye on that for the next couple minutes here. Yeah, Deere. Can I look at Deere? Sure. Deere is a very interesting stock here. Has had a lot of strength. They have that multi-billion-dollar buyback. Okay. Snag, you say, doesn't look to close near 88. Yeah, regardless of where it closes, this is overall some bullish action. If it were to break 88, that would kind of be the confirming. And so one of the things that with Deere, if you're looking to enter here on a call side, or if you're holding it, you're looking at and saying, well, you don't have the bullish confirmation that you would have if it traded above 88, but you have a better risk reward scenario. Okay, where you're a little closer to the 7, you can kind of have a little bit of a tighter stop on it. So less risk, more reward. You start to go above 88, yeah, you get confirmation, but you get a little bit more risk and a little bit less reward. So there's kind of a balance there with it. Overall, the price action, the candlestick action here on Deere is strongly bullish. Not only Deere, but even Caterpillar. And what do these two stocks have together? I mean, you're both talking about major buybacks in the works for both of them. Okay. Yeah, Steve. Top 3: Micron, VeriSign, and Morgan Stanley. Okay. Let me go back here to LinkedIn and Tesla. Tesla is the one that when I pull up really short term, I'm the most concerned about. Waking up to a $3 to $4 gap down on Monday. That said, volume patterns are strongly bullish. Extremely bullish here on Tesla, and so it's, hey, do we risk that $3 gap, or not having the cash or whatnot? Those are some of the things that are kind of going through. But from a pure trade standpoint, both LinkedIn and Tesla are still in very positive, very bullish positions here today. Yeah, Darren. No, good observation. It seems like Deere is a spring and summer stock with buying new equipment. Yeah, you can make that argument. At the same time, Deere could really be a strong January, February stock this year with that buyback. Okay, with that buyback. Max, you say risk it. Yeah, and you know I want to, right? I mean, come on. You know me enough to know that I want to hold both Tesla and LinkedIn. Do I wish I had some challenge money to go throw on AKS here? Absolutely. The options on AKS. Let me show them to you. AKS, these Januaries, these January 5.5s. You're talking about 18 cents fake value overall on those. A stock that can move 18 cents any given day, and a stock that has $8 kind of written all over it. That could be a big home run payoff, especially with the Fed action and everything that we have coming up here in January. Okay. Richard, good question. Would I be better with a January option on Tesla? Yeah, the one thing with Tesla, it's a December option, right? So we have to take into consideration time decay. Well, we bought Tesla in the money as it was, right? I mean, we bought it in the money and it's now gone deeper and deeper into the money. Okay, so Tesla, the price of the stock is about 148, right? The price of the option is about $18. So we have no real time decay here. I mean, we're not dealing with anything that's time decay. We're dealing with a delta of one. It's going to move with the price of Tesla, dollar for dollar. So I don't have to worry about rolling that up yet, or kind of changing that at all. Okay. No, Darren, I was agreeing with you as far as the cyclical trends there with Deere, but at the same time, we have a little bit of news that's out with Deere, right? And news will shift things from a trading standpoint. All right, let's take a look. What would you do with AKS? Seems like you have to buy a bunch of contracts. Yeah, I mean you'd have to with AKS, right? They're cheaper. So obviously you'd be purchasing more contracts. If you're going with the 5.5, you could go with the $5. Buy less contracts, deal with a delta of one. You're dealing with about an 80 cent delta here at 5.5, but wouldn't take much of a move higher to go to a delta of one overall. Okay, I'm gonna kind of sit on the sidelines on AKS until Monday. I don't think that if AKS starts to break above 6 on Monday that we've missed it, and I think we could go and jump in there. Yeah, take on Apple. Apple still not where I want it to be a buyer. Okay, still has not retraced. Still has not retraced here. Okay, still is not retraced overall. This type of price action where it gets one big down and then chunk sideways. Okay, overall sideways action typically has another leg lower. When you're talking about Apple and with me in my notes here, I just this is kind of what I have drawn. I have these Fibonacci retracements drawn, and we're looking at somewhere in the 550, 552, 540 area, where Apple would be a much more tempting pick up and buy for me today. Plus, they dealt with an upgrade this morning. I forget who it was. Came out, put a $700 price target on them, and they still sold off. That tells me there's some residual selling that still needs to happen here in the short term for Apple. Yeah. We're dealing with commercial real estate on O. Uh, Very bullish price action, especially with some of the volumes over the last couple days. This is going to be strongly sensitive to the interest rate environment. Simon Property Group kind of has some of the opposite action of O, had the boost and then the drop. Macerich here, kind of having come down. O's chart relative to the rest of the sector, a little bit more of a dip buyer type of a chart. It's not one that I get overly excited about, but if I were going to play it, I'd use today's low, 37.23, as the stop on that bomb. And price target, I'd be looking for about $40 in the short term. The Fed can really change this game overall with the commercial real estate stocks, and so I don't know how excited I'd be to be in them from a directional standpoint ahead of the Fed. No, Darren, good deal, good deal. Sorry. Good deal. Yeah, Google. Google also dealt with an upgrade here today and reversed hard, kind of like Apple, right? And look, if they're getting upgraded and they're not going up, there's some residual selling that needs to happen. And Google kind of in the same spot as Apple, a little more retracement, a little bit more pullback, broke the 7 here. Risk of dropping further is high. And so, Google here, I would have a tough time holding calls over the weekend. Kind of short term, though, you can argue that Google's right near support, right down here near the 1050, 1060 support area. And if you're holding calls, that's what I'd be looking for to hold there, this 1060 level. Okay, LinkedIn holding on to support here. Okay, continues to hold on to support. Tesla, as well, holding on to support. The risk here on Tesla, is about a move down to about 145. Obviously, Tesla can react crazy based on any type of a news. It's just that type of natured stock. But Monday morning getting down to 145 is kind of the technical risk there. Overall, we are going to hold both LinkedIn and Tesla into the close here today. Yeah, view on URS and the put volume on AKS in January. Yeah, URS. This isn't a stock that I follow very closely. It's got this gap down, probably on earnings, filled the gap and now weakening. It's probably one that's more of a fundamental play from a technical standpoint. This is a difficult one to want to be a buyer of from a technical standpoint. If I am, I'm looking for 50 to hold. Okay, I'm looking for 50, 50 to hold on that. AKS and the put volume. Yeah, AKS. Let me pull these up with the volumes here. Okay, and on the December options, you don't see a lot of volume on the put side. On the January, you don't have a lot of volume on the put side. You do have some heavy open interest on the put side at the $3 area. But remember, January, you're talking about things that could have been established over the last year, whether it be selling puts or something. It's not necessarily a bearish type directional play there for AKS, and at the same time looking at the open interest. Look, if I'm in my fund manager days and I'm going out and buying a big chunk of AKS stock, I'm buying puts to protect it. I mean, I have to. I have to protect that trade, or I go out and I'm selling some $3 or $4 puts throughout the year, or today going and selling some $5 puts, saying I'm willing to buy it at 5, and so that's kind of what I'm looking at there. The overall open interest on the volume doesn't really say anything about AKS there in the January and March. Yeah, AIG. AIG here. It was on Carl's top 3 yesterday. Nice move yesterday. Continual move here today. I'd love to see AIG bust 50. That'd be extremely bullish, a trend rider bull signal, and be a good sign that it's ready to fill the earnings gap here from November. So very nice action there. Continue to be on AIG. 49 could be a nice tight stop on that. Yeah, holding on to Tesla and LinkedIn here into the close today. Walmart. Okay, Walmart has finally had some corrective action, right? I mean, it had been going real strong. It had some good holiday sales numbers, some of the good commentary out of the CEO. It's come nicely back down to the lower band here. With Walmart, it's similar to Apple in the fact that If we're talking about retracement, we still have a little bit more that needs to kind of happen to say, all right, Walmart's in a good spot to kind of buy the dip on it. I would struggle to sell it right here. Walmart historically, after 3 or 4 days of selling, has a snapback, and to see some sort of snapback Monday, Tuesday, would not be surprised. They're not selling this on any big volume. This just looks like a very orderly type of correction here for Walmart. The one thing though is, yes, it's orderly and we'll probably have a snapback, but you can kind of say the same thing about Halliburton, right? Halliburton had the same type of move down to the lower band, but now it's kind of continued on lower. These aren't things I want to try to bottom pick. They're ones that, hey, when they finally decide that they're ready to move up and break above the 7, then I'm happy to go after. Netflix has driven me nuts because it's had one good bullish signal after another, and all in the face of this big old earnings reversal. And I struggle to kind of buy things in some of these earnings reversals. The trend is still very solid here for Netflix. It's down 1% here today, but the price action is very similar to some of the other stocks in this kind of momentum group where, there's just not a lot of volume on them today. There's no real game changing going on here. There's a little bit of profit taking going on as people aren't going to want to, not wanting to hold things too much ahead of the Fed. But that's kind of general market that we're starting to see. So yeah, Netflix, reversal in the upper Bollinger Band. Where's your risk? Well, moving down to 360 is kind of your risk, and it's trading up about 370 right now. So you have about $10 downside risk, in my opinion. Where, all right, you go below 360, you can't really be holding calls very easily there on Netflix. But until then, the trend remains the trend remains nice into the upside there. The VIX, okay. The VIX here today has been climbing all day. It gapped down just a little bit, and it's kind of continued to climb higher and higher. It's going to end pretty flat here. It's going to take a major surge in the market Monday, Tuesday for the VIX to drop ahead of the Fed. So those of you who own some VIX calls, I don't think there's a huge risk here of holding many of those over the weekend, since they're going to kind of hold some of their value ahead of the Fed. Now, if you have the Decembers that are going to expire before the Fed decision, you have a little bit of a different different decision to make there. But overall, the VIX is still kind of pointing higher, and it's kind of very similar to some of the market breadth stuff we've looked at, which is kind of teetering on the edge. The VIX is still in a bullish position, but a little bit of market selling, we can see a lot of these things like the bullish percent index, the VIX, and some of the other breadth indications really break down. All right. Well, thanks for hopping on. Any questions? Please feel free to let us know. Again, I apologize for some of my absence here, as I've been on the mend. I should be back to full strength. Knock on wood here Monday, and back at it. And we'll kind of take a look at Tesla and LinkedIn, and then kind of see how we want to position ahead of the Fed. I really like times like this with the Fed, in some of the plays that potentially set up. Historically, this year, Fed Wednesday has given a lot of triggers in the market. So it's we'll kind of see how that plays out there and have some fun with it. Yeah, PW VeriSign. Yeah, pulling back a little bit into the close here. This is kind of one of those things where, yes, it's bullish price action, but it's bullish price action in the midst of contracting Bollinger Bands. And so you never know, okay, is it ready to move now, or does it want to consolidate for a day or two before going the direction you want? Yeah, Worrybird. Colgate. Down here at 64. Look at the light volume. This is indicative of the overall sector. You're dealing with a little bit of a bullish candle here, but not a whole lot of volume, not a huge trading range. So I'm not really, this isn't a bullish candle that I would be buying. To stick with puts on here as long as it trades below the 7 is the play here on Colgate, and you're looking at this type of risk, this type of from August to snap back to the 7 there would kind of be the risk there in regards to Colgate. Yeah, Twitter had a nice upgrade here this morning, and has continued to be strong most of the day. Had one small pullback. Overall, a lot of money continues to flow into this. Very quickly. Okay, Lulu. As far as a good entry, I would struggle to enter here. PF. I would I would really struggle simply because it's getting ripped. It's ripping lower. But look how far it is from the 7. When something gets this far away from the 7, it tends to have some sort of relief rally or snapback rally. If you held a gun to my head and made me buy calls or puts, I'd probably buy calls into Monday, hopefully sell them on Monday on a little bit of a $1.50 pop. It pretty ugly action here, and we're talking about not only the first time this year it's had this action. We had this action in June. Investors continued to buy. We had similar action in September. Investors continued to buy. Eventually, they say enough is enough, and Lulu could very well be in that stage. Celgene here. This is kind of like some of the Amgens and some of the other, some of the others, some of the other stocks in its sector, some of these large biotech stocks. It's not necessarily bearish action, but breaking below 165, you just have that risk of one or two bad days taking it down to this lower Bollinger Band. The selling hasn't been on a lot of volume, but it's obviously there's selling that is coming in here. Yeah, Chris, CL is a dragonfly pattern, right? It's not one that I would trade or say, hey, this is a really good dragonfly. Simply because a dragonfly typically has a longer tail and it typically has bigger volume, okay? It typically has, bigger volume. And it's very interesting. What's the opposite of a dragonfly? It's a gravestone. Okay, well, Tesla, you could argue, yes, Tesla has a gravestone here today. But Tesla hasn't even traded within its normal range, on any given day, right? I mean, Tesla normally trades within a $6-7 range, has only traded in a $4 range on relatively light volumes and on no news. And so to say, hey, this is a gravestone that's worth reacting to is kind of like saying that Colgate's a dragonfly worth reacting to. Neither of them have any sort of implications for the trade going forward. Okay, they're not big volume type builders there. Perhaps one of the most bullish charts out there in the market here into the weekend is Visa. Okay, is Visa overall here. Breaking above 205. It broke in on Wednesday, pulled back a little yesterday on light volume, breaking back above 205 into the close. Extremely bullish action here for Visa overall. Discover kind of wants to try to break out there, break above about 53.5 would be very bullish here for Discover. PW, VRSN. Take a look at the 15-minute. Okay. All right. Pop up a 15-minute here on VRSN, getting that pullback, 30 cents? From 50 down to 20, 35, 40 cents here on VeriSign. I don't like to really trade too much off of the 15-minute charts. What does it show? Yeah, a little bit of a pullback into the close. Okay. Could it have more follow through? Yeah. Could it find support at the lower Bollinger Band? Sure. Does it match what the hourly chart is saying? Yeah, a little bit. That hourly chart breaking below the 7 hour right up here at resistance. There's nothing wrong with waiting for a break of 57.5, like Carl talked about there on Verisign. Yeah, Argen, RGEN Mel. Yeah, this isn't a stock that I follow. My guess with some of the volumes that are here, this is really more of a fundamental trade than a technical trade. And so the trend remains higher. You do have some support down here in the 1240, 1250 area. I'd be concerned if I was long Argen and 1240 broke. I'd be concerned. If I had to trade it, I'd want to trade it higher here with about a 1240 stop. Okay. All right, so we're holding on to Tesla and LinkedIn here into Monday. Okay, LinkedIn here, kind of holding in that 230, 228 area. Is there some risk on it? Sure, absolutely. It'd be nice to see it gap up above 231 on Monday morning. That would be real strong and actually give us a place where, heck, we could, even be happy about. Adding more LinkedIn. The overall pattern remains bullish, as long as 228 holds on there. Thanks, PW. Yeah, me too. Me too. Yeah, Vegas. Would I add LinkedIn here? I wouldn't have a problem with it. Okay, you basically have a bullish kind of consolidation pattern on the daily chart. Sure, do you have the greatest candle today? No. And then you have some support here from the hourly chart at the lower band of contracting bands. And so, yeah, I could not argue adding to LinkedIn right here. All right, so we'll hold LinkedIn, we'll hold Tesla. We'll look to pull one or both or whatever we need to do Monday to pull one off or to free up some cash to set up some potential straddles ahead of the Fed, or even some sort of directional trade ahead of the Fed here next week. It should be a lot of fun there with some of the things that the Fed is. Or projected to do or not to do. Have yourselves a great weekend, and we will talk to you later. Take care.